But hey, it's really great to meet you. For those who have not met you before, what's sort of the elevator pitch on yourself before we jump to the company?
Yeah, so I am a career investor in financial services and specifically helping businesses solve problems, and that's actually ultimately what gave rise to 1970 Group, and active in transportation and logistics, and looking forward to being here with you.
Now, I got to ask you, so 1970 Group, if we haven't heard of it, I have two questions. First of all, why the name? And second of all, what do you all get into?
So the name question comes up in just about every meeting. So good pickup on that. So it is the founder's vintage, which is to say my birth year.
Oh, okay. Well, that makes a lot of sense. And you get into stuff like collateral and insurance. Tell me a little bit about that. What's that all about?
Yeah. So a lot of your constituents, and frankly, much of corporate America, has a need to post collateral to satisfy the requirements of their insurance carriers. And as a practical matter, what that means is the company is taking some portion of their balance sheet and setting it aside for their insurance carrier. And this has been something that companies have done and been required to do for decades. And while it's common practice, it doesn't change the fact that it is an encumbrance on the insured's balance sheet. So in your case, for example, constituents in and around transportation and logistics are taking some of their valuable cash, some of their valuable liquidity, and setting it aside to satisfy the carrier. That's the problem we solve because, as you can imagine, nobody wants to have less access to liquidity, less access to cash. So we come in and are able to provide a solution to help that company, that freight company, that transportation logistics company, solve the problem by renting our balance sheet so they don't have to use theirs. That's the proverbial elevator pitch.
Well, that makes sense. We're in a climate right now where insurance costs, especially in trucking, are getting really, really, really high. They're putting some carriers out of business. Some companies can't even afford their renewals. How can something like collateral, because you mentioned it keeps cash on the book and everything. I bet there's some carriers that are struggling and they're like, look, we just need some more free cash. For those of you who don't know, this is a business with very small margins. So there can be times you can find yourself very, very cash tight. How has this tool helped me here in this insurance environment?
So, Tim, you nailed it. The problem is for the freight logistics companies, they have to post collateral. They have to post some of their balance sheet. Now, that balance sheet, to your point about low margins and perhaps an economic environment that is not as conducive as it may have been months or years ago, requires them to find alternatives for running their business from a cash perspective. Because if you're generating less cash from operations, you're looking to your balance sheet, right? To your proverbial piggy bank, your access to capital within your own business to fund that gap. So if your insurance carrier is asking you to post collateral, you're tying up some portion of your balance sheet to satisfy their requirement, but you could otherwise be using that to operate your business, to run your business. So that's where we play a pivotal role and an essential role in helping those companies, those freight, trucking, logistics companies, recapture that or repatriate that critical balance sheet to help bridge that gap and to run their business.
Very interesting. Now, like, do you have any examples of someone you've done this for or how this works in like the real world?
We do this day in and day out for corporate America. So we are the market adopted solution for corporate America to solve this problem. And so we do indeed. We have had companies, for example, come to us, and I'll specifically hone in on your specialty, right? And the purpose of this broadcast, this podcast, is we have a company that is a active acquirer of other businesses, and of course, an acquisition strategy requires capital. And they were out buying smaller tuck-in acquisitions, regional carriers, freight carriers, and they were looking for the proverbial nickels, dimes, quarters under the sofa cushions to fund those incremental acquisitions. They've been a client of ours for years at this point. We were able to step into the breach for them at a time when not only did they need incremental funding to fund these acquisitions, but they were also suffering from adverse claims development, which is the insurance industry way of saying the company's claims had really become a problem for not only the company, but also for their insurance carrier. And as a consequence, and you touched on this a few minutes ago, premiums have gone up. Premiums have gone up dramatically, especially in certain segments of insurance, certain lines, as the industry calls them. And as you are well aware, the commercial auto is a key part of that. And the solution to those increased rates is finding incremental liquidity from your existing balance sheet to fund not only the increased premiums, but in this company's case, in this client's case, the increased premiums and the acquisitions they were making. So we were able to come in, offer them a solution that allowed them to repatriate their critical capital, so which is to take their critical capital back onto their balance sheet, allowing them to make those acquisitions, continue to run their business. And it was at a time when we first met them, interestingly enough, and this is going to be something that all of your listeners are very familiar with, it was at a time when they were suffering from acute driver shortages. And a big part of their acquisition strategy really required them repopulating their driver population. And they were struggling with that. And that incremental liquidity ultimately played a key role in them thriving. And fast forward to today, and the business is in much better shape. They have gotten their risk program, which is to say their work comp commercial auto program, where they needed it, and have continued to fund their growth. And that comes right out of your listener group, as it were.
What size fleet typically benefits from something like this?
Yeah, so typically our clients are what we call larger middle market, or what the industry calls larger middle market. So on the very small end, and I'm going to answer it a little differently than the way you asked it. I'll talk about revenue as opposed to fleet size.
Sure.
Because of course the mix of the business matters a lot. But you're talking about companies that are doing typically at least $100 million of revenue or more. There's nothing special about that number, 100 million, meaning it could be a company doing 90 million. But you're really talking about that neighborhood of revenue before we're able to step in and help. Because a critical component of what a company has to have is they have to have audited financials or reviewed financials. Your smaller fleets just aren't going to have companies that have auditor reviewed financials, and that would create a stumbling block for us. So that's why you tend to see larger businesses are typically our clients.
Very, very interesting. Now, what should transportation companies, your type of clients, the people you'd like to attract, what should they be aware of that may be coming up this year, or they're not thinking about, that you'd really like to put in their head?
Well, look, we still have with respect to the industry, we still have some of the micro considerations around access to drivers, commercial insurance rates going up. How do you solve that? What's the right footprint for your business? A lot of folks have been growth minded by acquisition, per the conversation we were having just a couple minutes ago. And while that has been a common strategy for a lot of industries, by the way, not just transportation and logistics, the question that I think a lot of folks should be asking themselves is, where are their most profitable business lines? Which states should we operate in? What lines do we want to operate in from a hauling standpoint? Because being able to weather the storm of economic uncertainty, the macro uncertainty, certainly rising rates, rising premiums. Obviously, there's the recent headlines out of the East Coast as it relates to the port shutting down because of the ship grounding and the bridge issue. You want to be able to make sure that you're driving maximum profitability as it relates to your current footprint before just making acquisition for the sake of acquisition. And we are well aware of the fact that a lot of companies like to grow through acquisition, not just organic growth. And there's nothing wrong with that strategy. But from my standpoint, I think it's best practices to make sure your own current house is in order before you think about getting other folks' houses in order and bringing them into your business. That's my 2 cents on the topic anyways.
I mean, hey, we've been in a freight market that's been about 2 years of decline. On Monday, I talked about it. Rates were down another 8% this week. So I know every single trucking company out there, or at least a lot of them, are looking for ways to get more cash on the book, especially as we wait for more freight volume to come in and recover. But it's been a long, sustained winter for a lot of these companies. Now, if someone needs your help, they need your services, where do I send them to?
1970group.com is our website. On our landing page, you will find a 90-second or so explainer video about what we do. There is also an info at link where you can shoot us an email for info@1970group.com, and somebody will get back to you as it relates to being able to help you with the collateral solution that would be tailored for your business. And of course, always happy to be a resource for you, Tim. Anytime you want a perspective on collateral and the state of the financing market in trucking, happy to join.